Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. I'd like to talk about the equity markets this morning, and the equity markets are possibly in a new uptrend. So let's talk about this a little bit. I've talked about this previously. On Wednesday, January 20th, there was a big reversal day in the NASDAQ and the S&P 500. And we also saw the same thing happening in small caps and the transports, which were lagging the market. Now, last Tuesday, we got a so-called follow-through day confirming a new uptrend when the markets rose greater than 1%, 1.2% or something like that in greater volume. However, this was negated last Wednesday when we got a big distribution day. The market sold off pretty heavy. And typically when that happens, I tell you the market may not be ready to go. However, last Thursday we had a mild rally, and Friday we had again a pretty huge rally, again confirming the possible rally to the upside. The NASDAQ rose about 2.5%, same with the S&P 500. And again, the small caps and the transports rose over 3% in greater volume. So that tells us that the market may be ready to turn back up. Prior to this, the sentiment was very negative, giving us that possibility at least of an oversold bounce. So now we're just waiting to see will this rally continue. So the things we're looking for is over the next 2-3 days, as long as we don't see any heavy volume selling on the indexes, this uptrend may very well be intact. Now, one of the things that is still quite lacking a little bit is leadership in stocks. Basically, you have stock like Facebook that's doing really great, broke out after earnings, hitting new highs this morning on volume, but that's sort of an isolated event. This afternoon, Google or Alphabet, symbol GOOGL, will report after the close, and that perhaps may tell us if there's going to be more risk, if people are going to, well, we'll see how Google does. And we'll see how that stock performs. However, Google did recapture its 50-day moving average on Friday on big volume. We saw similar actions in stock like Alta Salons or Avago Technologies. So a few stocks are starting to set up, except we just don't have that many stocks moving into new highs, again, with Facebook being the exception. Now, of course, the other problem is biotechs. Biotechs are, especially the big cap biotechs, they're lagging pretty badly. So depends how you like to trade. If you're a value player, actually some of these big cap biotechs like Gilead, Celgene, Biogen, Regeneron, Amgen may offer you good value at these points, but you'd like to see them turn around a little bit, trade to the upside. And lastly, I think one thing that's worth mentioning is oil. A lot of talk about how oil is correlated to the recent market turmoil, and it's correlated right now at this time and point. Historically, there's very little correlation with oil and stocks. They go from periods of being extremely correlated to periods of being not correlated at all. So that's just a little bit of noise. I think you're better off watching the price and volume of stocks. And actually, if you do want a few stats on oil and stocks, since through the 1980s, 1990s, and the 2000s, whenever oil fell anywhere from 50 to 70%, pretty much a situation now. Stocks actually ended up having a pretty good year after that, rising anywhere from 15 to 37%. So you can keep that in the back of your mind. However, that just sort of makes for good talk. In reality, you want to let price and volume be your guide. So keep your eye on the markets, see if we get any more breakouts to new highs, and of course, watch to see if we get any more distribution over the next following days. So this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Have a great trading week.